Welcome to this explainer, everyone. Okay, let's dive into this. Today, we're taking a really close look at a totally fascinating analysis from financial expert and author David McKnight. We're kind of standing at this unique economic crossroads right now, looking at a future that promises both, well, unprecedented technological miracles, but also some pretty terrifying financial pitfalls. So how do you make sense of it all without losing your mind or, your money? Well, that's exactly what we're going to map out for you today.
Here's a quick look at our roadmap. We're going to start with boom versus doom, then shift over to the historical reality of the markets. After that, we'll break down something called the 95-5 rule and wrap things up by tackling the tax time bomb. All right, let's get into it.
Starting off with Section 1, Boom versus Doom, navigating those conflicting predictions.
Now, if you felt your anxiety spike lately while scrolling through the news, trust me, you are absolutely not alone. The predictions we're hearing from major global figures are just completely all over the map. And this brilliantly illustrates the tension that, honestly, everyday investors are feeling right now. On one hand, you've got Elon Musk predicting that the global economy won't just grow a little bit, but could literally grow 10 times larger over the next decade, all thanks to AI. But then, on the exact opposite end of the spectrum, you have billionaire investor Ray Dalio warning us about impending debt crises, geopolitical instability, and massive systemic market shocks. It's a pretty heavy juxtaposition, right? An unprecedented boom on one side and a catastrophic bust on the other.
Let's zoom in on what's actually driving Musk's prediction. He points to this concept called a hard takeoff. Basically, this is a scenario where AI systems start designing the next generation of AI systems. It creates this wild feedback loop of exponential technological improvement, leading to an explosion in human productivity unlike anything we've ever seen in history. And look, while it might be easy to brush that off as overly optimistic, McKnight reminds us that Musk actually has a remarkably strong track record of calling major technological shifts way before the rest of the world catches on.
Now, Musk did throw in one major caveat here. He noted that a catastrophic global disruption, think like a World War II-style event, could obviously derail that massive growth trajectory. But McKnight offers this brilliant synthesis of these two opposing views. He points out that actually both forces can exist at the exact same time. You don't actually have to choose between believing in extraordinary prosperity or total world catastrophe. Systemic risks and incredible technological growth, they are happening simultaneously.
Moving on to Section 2, the historical reality. It's all about progress over panic.
Let's move to and see how this builds, because to really understand how to act today, we kind of need to shift our focus from trying to predict the future to looking at the context of the past. It's time to normalize market crises. Over the last 100 years, there has literally never been a period where investors didn't have a perfectly valid reason to panic and just sit on the sidelines. I mean, we've had recessions, world wars, massive inflation spikes, and, recent global pandemics. Yet through all of those terrifying events, the stock market's long-term trajectory has been this steady upward march. Why is that? Well, because the market ultimately reflects human progress, innovation, and just the fundamental ability of businesses to adapt and grow. And that brings us to this absolutely crucial mantra from McKnight's upcoming book, The Secret Order of Millionaires. Time in the market, not timing the market. It's an age-old saying, sure, but it serves as the ultimate philosophical anchor for true wealth building. The people who actually build real wealth, they aren't the ones frantically jumping in and out of the market based on today's headlines.
To really succeed, you've got to commit to a few core behaviors. First, you absolutely must resist those emotional reactions to scary news. Second, you have to allow the math of compounding to just do its thing over time. And most importantly, you cannot let short-term fear cause you to miss out on long-term opportunity. If you're just sitting on the sidelines hoarding cash, waiting for the next market correction to validate all that apocalyptic rhetoric, you are going to completely miss out on the incredible value generated by this upcoming AI-driven productivity boom.
Okay, Section 3, the 95-5 rule. Let's talk about structuring your portfolio.
So we're transitioning now from the big picture macroeconomic theory down to micro-level strategy. McKnight advocates for a really simple, highly disciplined approach rather than, frantically trying to pick individual winning stocks or chasing hot sectors like crypto. Now, what's really interesting about this slide is the sheer simplicity of this core allocation. We're talking 70% in a total U.S. stock market index fund and 30% in a total international stock market index fund. That's literally it. This structure gives you direct exposure to thousands of companies all over the globe. You don't have to guess which specific AI company is going to be the ultimate winner. You just buy the whole haystack. Now, maintaining this portfolio, it isn't flashy, it isn't exciting, but man, it works incredibly well. Step 1, like we just said, is your 70-30 allocation.
Step 2 is just monitoring your accounts. When your investments drift more than 5% out of alignment, like say your US stocks grow so much they suddenly make up 76% of your portfolio, well then you move to step 3. You just rebalance the portfolio right back to 70-30. It's a super unflashy but highly effective discipline.
But wait, what about having a little fun? Well, that's where this number comes in, 5%. McKnight suggests a strict, absolute maximum limit of 5% of your total liquid investments for anything speculative. The other 95%? That is your serious, time-tested, boring but effective retirement core.
So what exactly goes into that 5% bucket? Well, this is where you can let loose a little and indulge your impulses. If you want to invest in rare collectibles, vintage sports cards, or as McKnight jokingly points out, if you're Logan Paul and you just have to buy an exotic T-Rex skull, go for it. There's absolutely nothing inherently wrong with that. Provided, and this is a big provided, you keep that impulse strictly checked under that 5% threshold. That way, you're always protecting your ultimate retirement.
Finally, Section 4, the tax time bomb. Let's look at shielding your wealth.
This brings us to the last critical element of McKnight's strategy, known as the Power Zero framework, which is all about eliminating your tax risk in retirement, because now we have to shift our focus from growing your wealth to actually keeping it. Just look at this massive number, $200 trillion. That is the staggering amount of unfunded obligations the U.S. federal government currently faces for things like Social Security, Medicare, and Medicaid. Guys, that's a number so big it's almost hard to comprehend. It is a mathematical reality that simply cannot be ignored, and yes, it is absolutely going to impact your wallet directly.
So, the crucial point is this. Building immense wealth through AI and market progress means absolutely nothing if you don't shield it. Some economists are warning that federal tax rates might literally have to double just to pay the interest on our exploding national debt. So you've got this massive AI economic boom on one side, colliding head-on into potentially doubled federal tax rates on the other.
To navigate this incoming tax bomb, McKnight points to some very specific solutions. The goal is to capture as much of the market's growth as possible inside tax-free accounts. We're talking about Roth IRAs, Roth 401ks, and properly structured, properly funded cash value life insurance to act as a sort of volatility buffer in retirement. These are the tools that actually allow you to grow your wealth in a way that is legally shielded from those dramatically higher future taxes.
Look, the direction of human progress has pretty much always been upward. AI is set to continue that trend in a truly massive way. But your success? That depends entirely on your discipline today. So I want to leave you with this final thought. Will you let short-term fear and apocalyptic headlines sideline you, or are you strategically positioned and properly tax-shielded for a 10x future? Take a hard look at your own portfolio and ask yourself if you're truly ready. Thanks so much for hanging out with us for this explainer.